Your finger's over a button that says confirm. $22,340, an app you downloaded 11 minutes ago. You don't know it yet, but this exact move, same finger, same hesitation, comes back for the next 30 years. The app changes its logo a few times. The mistake doesn't change at all. $340 left after rent, after the loan payment, after groceries that cost more than last year for some reason nobody explains. You found the stock on a forum. 1 a.m., the hour when everything sounds more true than it actually is. 43 comments, everybody's sure. Everybody's saying moonshot, 10x, like they're talking about something other than money. You didn't read the earnings report. You don't even know what's in one really. You read the comments twice and the chart once. That was the research. You hit confirm. The app makes a little sound, almost cheerful, like it's congratulating you for something you haven't done yet. 4 days, it goes up. You check it before brushing your teeth. You check it in a meeting, phone angled so your manager can't see. You check it at a red light. The checking isn't about the money. 9% on 340 is $30. It's about the feeling of being right. That feeling is the most expensive thing you buy that whole year. You don't pay for it with cash, you pay with attention you don't get back. Day 5, down 6%. Noise, you tell yourself. Day 12, down 19. You stop telling yourself anything. Week 3, down 40. You don't sell, not discipline, just frozen. The app doesn't know what happened to you specifically. Doesn't need to. It still sends the push notification. Your stock is moving. Doesn't say up or down. Doesn't have to. You already opened it before you finished the sentence. Here's the part nobody tells you when you download your first investing app. It's not built to make you good at this. It's built to make you open it. 2 different products wearing the same icon. You don't tell anyone about the $136. Saying it out loud means saying why. And the why is the part that actually costs something. Accounts back up to 2,800. Not from the forum stock. You sold that quietly at a loss, never mentioned it. But from 3 years of deposits, you almost forgot you were making. $40 here, 60 there. Money that doesn't feel like progress until you look at the total. Then you find a software company nobody at your office is talking about yet. Small, growing fast, a chart with a line going up at a rude angle. You actually read the earnings report this time. Look up 3 terms you don't know. Feel a little ridiculous. A little proud. You put in $400, 9 weeks, up 65%, $2,600 off that one position. You tell your roommate, you tell your cousin at dinner. You don't bring up the forum stock from 3 years ago. That story doesn't fit at this table. And quietly, you start believing the 65% was a skill, not a volatile stock catching a good stretch. Nobody tells you the difference. Nobody's getting paid to. The app notices something too, not your confidence, just your activity. One morning there's a banner, margin trading now available on your account. Available is doing a lot of work in that word. It's not a suggestion. You don't fully get what margin is, you get enough. Borrowed money, bigger position, bigger upside. At 25 with 1 win behind you, that feels like plenty. You double down on the same software company, not $400. 400 plus 400, that isn't yours. 3 weeks later, a correction hits the whole sector. Nothing to do with the company. The stock drops 31%. On margin, that's not a 31% loss for you. It's worse. Accounts down 70% in 11 days. Margin call. A real one, a deadline measured in hours. You don't have the money. The position gets sold for you. The system doesn't pause to ask if it's a bad time. It's never a bad time for the system. $840 left. You don't tell your roommate. You don't tell your cousin. The story from the dinner table doesn't get a follow-up. You open the app a week later out of habit. There's a new tab at the bottom. Margin. Still there. Still available. The system doesn't remember what happened to you. It just remembers the door stays open. 11,000 now. Sounds like progress. It's scattered across 6 accounts that don't talk to each other. A brokerage from the margin mess, still open out of inertia. A robo-advisor a coworker mentioned 18 months ago, funded once, never touched. A crypto app from a weekend that felt important and doesn't anymore. 2 old 401ks from jobs you don't have. A savings account that calls itself an investment account and doesn't beat inflation. 6 small relationships, each one convinced it's the center of your financial life. Each one sends a monthly email, different font, same vague encouragement at the bottom. You skim all 6, archive all 6. You couldn't tell anyone your actual net worth without a calculator. One Tuesday in October you try to add it all up on the couch, TV on mute, takes 40 minutes, 3 tries, because you can't remember if the crypto number's already in dollars, and one of the 401ks is under an email you don't use anymore. By the time you have a number, you don't trust it. You write it down anyway. 11,000 and change. The trading happens in bursts, a rate headline, you move money. A friend says a sector's about to break out, you move money again. Small amounts. 300 here, 500 there. One regional bank stock a podcast mentioned. Bought Thursday, sold Monday, down $210, not because anything changed, because you got nervous watching it sit flat and needed it resolved. What you don't track is the cost of all that attention. Every trade held under a year gets taxed as regular income, not the lower long-term rate. You don't find this out until a form shows up in spring, 14 pages. The phrase short-term capital gains, 11 times. You look it up. The year of being engaged, informed, active. The accounts are up 6%. Subtract the fees you stopped noticing because they were small, one at a time. Subtract the difference between the short-term rate and the long-term one. Add back the bank stock and a couple smaller losses just like it, the kind that resolve fast enough you never mention them. Real number, 1.1%. A savings account would have done almost as well and asked nothing of you. You start a spreadsheet that weekend. Not because someone told you to, because you're tired of not knowing where your own money is. The spreadsheet worked. 6 accounts down to 2. Old 401ks rolled over on a Saturday, took less time than 2 years of avoiding it. Crypto app deleted, no big philosophy, just admitting you never had a strategy there. What's left? A retirement account and a taxable brokerage, same low-cost index fund. 43,000. First number in 4 years you're actually proud of in a steady way. Then a credit crunch starts somewhere, most people have never heard of. 7 weeks, the index is down 24%. First 9 days you watch and do nothing. Feels like progress. Old you would have sold by day 3. By day 11 the drop hasn't slowed, and a different kind of fear shows up. Not the fear of being wrong, the fear of being wiped out. Doesn't care that the math says those are different things. 11 p.m., you open the app, there's a button, just says sell, big, sitting right where your thumb already is. The button showing the fund's 40-year history is 3 menus deep smaller, you'd have to go looking for it. Nobody hid it on purpose. It's just not where the fear is standing. You tap sell, then confirm. Same gesture from 10 years ago, different number. Motion hasn't changed. 5 months you hold cash. Tell yourself you're waiting to stabilize, which sounds like patience and is the opposite. It keeps recovering. By the time you decide it's safe, the index is up 31% off the bottom. You missed the whole recovery. Not most of it. All of it. You tell people the market got rough for a while. True. Also conveniently incomplete. 61,000 now, 3 years after the 5 months in cash. You think about that gap less than you used to. It's still in the drawer. You know which one. This year you do something that doesn't feel like much. Set up an automatic transfer, $600, second Friday every month. Move the app off your home screen into a folder you barely open. Market drops 18% that spring. You find out from a headline, not from checking. 5 days go by without opening the app. An accident, not discipline. You don't sell. First time in 13 years staying in didn't take willpower. A friend from that old dinner table, the one who heard about the 65% and never heard the rest, starts posting his trades. Options every Monday. A screenshot every Friday. He calls in March, excited, a position up 80% in 6 weeks. He asks what you're doing differently. You tell him the truth, which sounds almost embarrassingly simple. Same fund, same amount, same day, nothing else. He laughs, says that sounds boring. You don't argue. He calls again in July, less excited. March's position gave it all back and then some. He's rolled into a biotech name, smaller, riskier. You listen. You don't offer advice he didn't ask for. You see him once more, 3 years later, at a wedding, between jobs and between brokerages, talking about a position he's sure is about to turn around. Still funny, still likable. Just talks about money faster now, louder, more names, fewer numbers. You don't see him again after that. Not dramatic. People drift when the dinner table stops forcing the comparison. What you get now, that you didn't get at 22 or 25 or even 32, the whole industry around you runs on activity. Fees, trades, margin interest, advisory cuts. None of it comes from someone who logs in 4 times a year and changes nothing. You've become a worse customer for almost every product they ever sold you. Better investor too. Same move. 310,000 now, same 2 holdings since 35, still automated. By most measures, nothing should go wrong at this level. Something does, quietly enough it takes 2 years to notice. A financial advisor reaches out through a colleague. The office has the kind of quiet that costs money. Soft carpet, glass table, a bowl of mints nobody touches. He talks about private credit, double-digit historical returns. A structured note that limits downside while capturing upside. He has a chart for everything. Asking a basic question feels like it would expose you more than him. You put in 40,000. The pitch makes the index fund sound like a starter strategy. Nobody at this level should still be doing the simple thing. That's the suggestion, never said outright. Page 11 of the fund's materials lists the fees, slightly smaller font, 2% management fee, a performance fee on top, a separate fee from the custodian. None of it's hidden exactly, it's disclosed the way a warning label is disclosed on something still designed to get bought anyway. You don't run the math until 18 months later, by accident, updating your own spreadsheet with the fund statement open in another tab. Headline return, 8.1%. After every fee, actually added up across 3 sections of the document, 5.8%. The index fund you stopped checking 5 years ago did 9.4% the same period, for an expense ratio of 0.03%. You call the advisor. He's not defensive, which somehow makes it worse. Talks about lower correlation, income generation, all of it, technically true. None of it explains why the number after fees came in under what doing nothing would have gotten you. 890,000. The private credit fund's gone, unwound at a small loss once the lockup cleared. 2 funds again, 1 allocation, rebalanced once a year on a calendar reminder. No moment attached to this mistake. No tap of confirm, no margin call, no 14-page form. You've meant to set up a basic estate plan since your 30s. A will, beneficiaries that match your actual life. Every year something more urgent eats the weekend. Your father has a stroke in March, recovers most of his function. The weeks after reveal his own beneficiary forms were never updated after your mother passed. Nobody planned it badly on purpose. It just never became anyone's priority until a Tuesday made it everyone's emergency. You go home and actually check your own accounts. A 401k still lists someone you dated for 8 months in your 20s. You hire a fee-only planner, paid flat instead of commission, and she asks the question nobody selling you anything ever asked. What happens to this if you die on a Tuesday? Half your answers are wrong. Takes 6 weeks to fix what should have been handled gradually over 15 years. 1,700,000. Properly titled, beneficiaries correct, estate documents signed, the work's done. What's left isn't a problem, it's a number to maintain, which is exactly why the next mistake doesn't look like one. A new advisor reviews the portfolio. Still mostly simple, but a sector tilt's crept in, a higher yield fund there, each one reasonable on its own. Together they've added risk a portfolio at this size doesn't need. She asks a question nobody in 30 years of advisors and forum comments ever asked directly. What is this money for? You start to answer with a number, the way the industry trained you since you were 22. She waits. The silence makes it obvious the number isn't the real answer. The honest answer is smaller and stranger. Not being a burden on your kids, being able to help once without a whole conversation about it. A retirement that doesn't depend on what the market does in any given year, because you've lived through enough of those years to know what that costs in sleep. You simplify the portfolio that week. Calm this time. Nothing like 32, thumb already moving before your mind caught up. The thing that actually compounded over 30 years wasn't picking the right stock. It was getting faster at noticing you were wrong. First time at 22 took 3 weeks to even register. This time it took an afternoon. Somewhere right now, a different city, a different phone, a 22-year-old downloads the same app. Rounder corners now, different shade of blue, same promise. He's got $310 in a forum thread, 41 comments deep, everybody sure about the same thing. His finger finds the button. He doesn't know about the margin call coming at 25. Doesn't know about the recovery he'll miss at 32. Or the friend who will quietly disappear from the story around 35. He doesn't know the mistake was never really the problem. The problem's always how long it takes to notice. He taps confirm. The app makes a small sound, almost cheerful, like it's congratulating him for something.